All right, we are back here on the floor at Consensus Hong Kong. I'm Sam Ewan alongside Will Foxley. Joining us right now, Jason Atkins, Chief Commercial Officer at the global trading firm and liquidity provider Auros. Jason, great to see you again.
Thank you for having me again.
Yeah, first of all, thank you for being a partner to Consensus, now the second year in a row. It's been really wonderful having you guys here. What's your sense of the show, the vibes, and the feeling around Hong Kong specifically?
I mean, it's Consensus in Hong Kong last year was incredible.
Yeah.
A lot of anxiety from a lot of people about this year because market conditions, but honestly, it's exceeded expectations already today. Fantastic setup, fantastic sponsors, I think, around the place. Last year was so good that it encouraged us to sponsor main stage and make sure that our presence in the city was known. Hong Kong's a very close part of my heart. I've been here for 13 years and our firm has over 50 staff now in the city and really supportive of what Hong Kong is doing to embrace the digital asset industry.
Jason, your panel today is titled, Are Market Makers Evil? In 30 seconds, what's the answer, yes or no?
The answer is no. Market makers are not evil. I think to flip the script a little bit, if you look at a recent event, October the 10th, where a lot of market dislocation and volatility happened, a lot of people took away from that market makers caused it or market makers are evil. The reality is, if you look at that event, it exposed what happens if market makers were not there. What a lot of we know for sure, in fact, Binance has said and announced it, is that things broke. The APIs broke and overuse of the exchange in such volatility led to market makers being unable to perform the duty that we do for the market. And if you take a step back from the actual price action and think about that, it shows that if we're not there doing what we do best, things would be very, very difficult and very, very different. And I'd mentioned this on stage, but we've been grappling with the path to institutional adoption for so long. That path becomes a lot harder if your volatility goes from 70, 80, 90 to 200 volatility again, and liquidity is absent. Pension funds, hedge funds, venture capital firms, liquid funds, they will not be able to touch this asset if it's going to do what it did on 10/10 every single day. So to me, the takeaway from volatility events like that is market makers are an essential part of the lifeblood of this industry, and embracing and understanding why they do what they do and how they work and why they're important is a good thing for all participants of every size to know and understand, because then they can lean into the liquidity and appreciate it for what it provides for them.
So when I'm looking at that question that Sam gave you and then your answer there, I'm thinking what's missing then? So if the market makers weren't able to connect because of the API issues and then we had such volatility going forward, what can we fix to make that not happen again? What can we do to prevent such catastrophic volatility, which I would note is a history and a fixture of Bitcoin's price?
So it's, of course, you try to plan for historical events and you look at what has happened in the past and you build according to that. There's always going to be black swan events that occur. You try to predict and analyze what they could be. It's partially on firms like us to build the systems to make sure they're robust, but it's also on the exchanges to partner with the market makers, to take feedback on board, to listen to what we say about do it this way or do it that way. Sometimes it's self-serving, but most of the time we're trying to get to the point where we can do what we do best. Not in a altruistic, we just want to provide liquidity because we are charitable. It's because the very act of us trading provides all market participants with a better environment to trade in. Tighter spreads, deeper books, stable markets, more investable asset class.
Jason, I want to pull on something you said earlier, which was that the sort of health and liquidity in the DEXs seem to hold up a lot better than in the centralized exchanges during these big volatile events. Can you tell us a little bit more about how does a centralized exchange manage that and how can they work with you guys?
Yeah, so centralized exchange, obviously by the name, is a centralized group that's building and runs their systems independently at their own discretion. Decentralized exchanges have seen explosive growth, especially in the recent months. The perp-dex narrative is back. We've seen things like Hyperliquid scale at hyperpace, not to use a terrible pun, but at hyperpace you've seen things like Lighter come on board. Volumes have shifted there. Now, it's not just because there's airdrops, it's not just because people are speculating on Hyperliquid or Lighter. It's because the user experience is good. And when I talk about user experience, I'm not saying what is it like to use it on your mobile phone or on your desktop. I'm talking about the experience of trading on there. So do you feel like you're getting ripped off? Is the slippage bad? You put your orders in and they get cancelled? And as exchanges start to understand that the end user is the most important person to invest in, they'll start to build those systems in better ways to deliver a better user experience. And I think this healthy competition that we're seeing between centralized exchanges, the incumbents, and decentralized venues is only going to lead to a better outcome for users when it comes to user experience, which is involved with liquidity. If you don't have that liquidity, it's a bad user experience. So we are engaging, as we always do, with all of our centralized market making partners and the decentralized ones too, to talk to them about ways they can use our skill set, our systems, to provide liquidity to their users, to create a better user experience, to beat their competitors. And we work with all of them. We're open to providing feedback. We have our developers working alongside them. We're very engaged with our partners. And I think over the next few years, as that competitive landscape shakes out further, they will embrace more and more of that dialogue and discussion, because you can't just build a product, have it sit stagnant, and then wonder why perp dexes are coming up and eating your lunch. You have to invest in the future, and I think the exchanges will do that.
Tell us a little bit about building in Hong Kong and how your firm has been expanding here. You said 50 employees or so are in Hong Kong. Where do you see Hong Kong being in the center of not only crypto, but TradFi going forward?
Yeah, I mentioned this on stage earlier, but I think the announcement earlier this morning by the chief executive on a recorded message to Hong Kong was obviously very inspiring and great for the city. One of the first times he's spoken at length about the digital asset industry. To me, the playbook that Hong Kong will run, I have no doubt about this. I've been here 13 years and plan to be here for at least another 13, if not longer. The playbook they will run, they have run before. In the 80s, 90s, and 2000s, Hong Kong acted as the hub for traditional financial markets to access Chinese capital markets and the East. And they know that worked. It created a boom in this city. It created major financial flows between the East and the West. And it worked and drove massive economic growth for everyone who's involved. There is no reason why they shouldn't run that playbook back again. And if you look at China's approach internally to digital assets, having Hong Kong as a key access point is beneficial to them in allowing them to run and manage their agenda accordingly. But it also allows Western capital markets to get into the East as well. So to me, if you run a cross-section across all of Asia, Hong Kong is the only country that really fits the bill. I think you've got very few countries that have the sort of financial infrastructure pipes already built up because of the traditional financial setup, and plus the attraction to even expats like myself, that it's a very easy city to live in and work in. And I hope to be here for a long time. And I honestly think Hong Kong will become the center of Asia, the center of digital assets globally.
All right, so Jason, we'll have to wrap it up there. Thank you as always for stopping by. Great seeing you.
Thanks. Good to see you guys again. Thank you.
That was Auros Chief Commercial Officer, Jason Atkins. We'll be right back.